Billy asked, is this correct, sir? And this was just a comment on my momentum trading strategy guide. So let's actually walk through this chart together. So first, just before even looking at the entry, stop, and target of the trade, let's look at whether or not this type of price action is good for momentum or not. So the first thing that we want to see is, do we have a slow, grindy staircase type of price action? Yes, we absolutely do. So why is this so important? Because it shows that you have a high margin of error to trade momentum shorts. So let me explain what I mean by that. A high margin of error means that if you were to enter the trade a little bit earlier or a little bit later, you would still win the trade. If you were to enter on a different time frame, even, or like you made some mistake with your entry, you would still win the trade. That's basically what we're trying to measure. The easier the trade is to take, the higher the quality of the trade itself is. So, right, if you were to take that short from this support, from this support, from here, from here, from here, from here, from here. It doesn't matter which support you would have picked. Every single support level was broken, right? So like this is you trying, like imagine there is a giant dartboard and this is you and you're trying to throw a dart and land and hit this target. If the target is like 20 times the size of your entire body, when you throw that dart, you're probably going to hit the target, right? So in terms of the structure like of the price action, this is perfect. So that's the first thing. The next thing is the volume, right? So we want the volume to be consistently increasing over time because this shows that the market is getting more and more and more fired up, right? We're getting an increase in the number of participation in this specific coin. So the coin is getting more and more violent, and that is exactly what is happening. So how you can check if the volume is increasing or decreasing is you would look at the time of your entry, and you look at the average volume at the time of entry. So it's right here. Then you look at the whatever the average volume was since the starting point of the staircase. So I can't actually see where the staircase started, but let's just assume that it started here. Where is the average volume? Here. And then we compare if this is going up, flat, or down, right? So this is clearly going up, so therefore volume is increasing. So we've got the volume sorted as well. And those two are like the two like main, like really big ones. So the point is that if you are looking to trade any momentum short to the downside in this kind of environment, you're in a really good spot, right? So yes, you have picked the asset correctly. Well done, Billy. Well done. Okay, time for some criticism. So if I was to remove my drawings, we do have a little bit of issues with this chart. So the first thing is that we can't see any support or resistance levels which are on the chart right now. I can see here you've got your key levels indicator, so that's showing the previous 1 hour high and previous 1 hour low. But I'm a little confused why, like, how is this sharing, like, why is the low here? How does that work? Because I would assume the previous hour's low would be here, and the previous hour's high would be here. I'm guessing that's just something up with the indicator. Or maybe it's already 12 UTC? Oh, because it hit 12 UTC like on this spot. Oh, okay. Never mind. Okay, got it. So the reason is, okay, so it hit exactly 12 UTC and then the indicator updated to this high and then the lowest point in the last 1 minute. Okay, got it. That makes a lot of sense. Okay, so what I'd say then is, okay, you can leave this. This is clearly fine. Like this is sweet. I really like this. But I would recommend just to have some levels, like some additional levels drawn on your chart just for a reference point. So a big one would be this huge round number here at the 20, right? So this is a really big key psychological level, often at these like huge round numbers, like which are multiples of 5 or 10. So 20, 25, and then 15 all the way down here. These levels often have a whole bunch of limit orders which are stacked on top of them. And whenever price like hits one of those key levels, we can often see like a pretty violent reaction to them. So that's the first tip that I would give you. Have your big round numbers marked on the chart. So that's point number one. Point number two is wherever you're entering the trade from, right? So you clear like, okay, great that you've thrown on the risk reward tool. That's awesome. What I would do on top of that is draw the levels which you are basing your entry and your exits from. So I can see here, because I have to squint and I have to use my eye, I'm assuming you used this swing high for your stop loss placement. I'm assuming, but the stop looks like it's on the other side of that. So maybe I'm wrong. Maybe you picked some other level, which is somewhere here. But the point is that when you're picking your stop loss, draw the level that from the point that you picked for your stop loss placement. That's just going to make your own trade screenshot reviews a lot easier. So make sure you have the level drawn from where you are looking to put your stop loss. The next one is make sure that you have the level drawn for where you are entering the trade from. So it's like, okay, cool. I can see that you entered the trade here, but I don't know why you entered the trade here. Like, I don't know where that is based from. Like, are you entering this trade because it's a retest of this high? I don't know. Are you entering the trade here because maybe there was like some big, I don't know, some big level on the left-hand side that I don't know about, and then maybe I don't know, you waited for like a candle close through here, and then you put your limit order like on the other side of that, trying to catch a pullback into that level. I don't know. Is it because there was actually a big level like all the way over here, and you market sold somewhere here, but you wanted to market sell on the break of this level, like as price touched it, but you actually got slipped, and your entry is here. But for some reason, you just put the risk reward tool like a few candles to the right. I don't know. The point is that if you want, like, sure, if you're reviewing this trade screenshot like one day after you took the trade, it's very easy to just use your short-term memory and be like, oh yeah, the reason why I entered here is because of blah 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 blah, and you've got it fresh in your memory. But when you're reviewing the same screenshot like 6 months later, when you're doing like a deep dive into your journal and you're reviewing all of your past trades, when you see something like this, it can actually be really hard to like remember like, why did I enter here and why did I not enter like here or here? Like, yeah, sure, I get that the trade won, but like, why did the entry happen here? I don't know. So yeah, I would say like in terms of like trade selection and actually executing the trade, awesome, Billy, well done. The only real like feedback that I can like the only criticisms that I can give you is to just have a little bit more information on your chart. So yeah, have the big psychological levels, have the level drawn for your stop loss, have the level drawn for your entry, and then bonus tip, this one's like really underrated. I would recommend using the text box, the text box tool on your chart to write about any comments or any reasons or any thoughts on why you entered that trade. It takes like 10 seconds to do, maybe 20 seconds to do, but when you go back and you're reviewing the trade screenshot and you read your thoughts on that particular trade, it just instantly makes it like super crystal clear what you were thinking in that trade. And from there, it can be really obvious, like, was a mistake made in my thinking? Or like, was I tilted that day? Or did I just make all the right decisions, but the trade just so happened to lose because it just is what it is? What's going on there? And then also just having like random like extra thoughts or extra ramblings in the trade. This can also be good for like idea generation. So if you just have like, oh, I noticed that. Let's just pretend that you have a comment like, yeah, I took the momentum short, but it's interest. Let's say you put the comment like, but it's interesting how all mean reversion shorts would have worked equally as well in this regime. So you're just making a comment. And then let's say like 6 or 8 months later, you're going and reviewing the journal, you see this comment pop up, and then on one trade, and then like 30 trades later, you see a similar kind of comment, and then another 15 trades later, you see the same comment again. And then you have this thought like, huh, it's really interesting that this same comment keeps appearing in this really specific type of regime. I wonder if there's actually anything there that I could use to take advantage of. So, for example, when we have a regime that looks so absolutely fantastic for momentum shorts, right? Like this looks absolutely great for momentum shorts. It also might turn out that if the price action happens to look in a specific way, like if it happens to look really clean, not only can you spam momentum shorts, but you can also spam mean reversion shorts, double your trade frequency, and crank out a whole bunch more profit from the exact same move by trading two different styles, but you're just spamming them in the exact same direction because both of them just so happen to be really effective at the moment. So like the point is that just put more information in your trade screenshots and you'll be able to get so much more value out of them.